DocuSign, whose software handles electronic signatures, is rallying roughly 14% after the Wall Street Journal reported that DocuSign was considering a sale. Again, recapping U.S. equities, trading mixed, S&P down 7, drop there of 0.2%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Continuing this theme on AI, Kaylee, we took a deep dive with AFLAC. Trying to get to the matter here in Washington has been very difficult for lawmakers. You brought us back to that symposium, I guess, the all senators briefing with the titans of tech. The fact of the matter is, not really anything has happened since then on Capitol Hill. The White House tried to leave a marker, but there's only so much that the administration can do on this when it comes to regulation.
Right, and it basically was just a directive of all these different federal agencies to handle it in their own respective ways. Mm-hmm. And it feels like this is typically how it goes with new things. It's piecemeal regulation, a lot of self-regulation on the part of these companies for some time until something is actually formulated. And it feels like that's the moment we're really in right now.
That's true. I'm glad to say that David Weston's taken a swing at this. I'm guessing that he might learn more because he's talking on Wall Street Week later on with the former CEO of IBM. And David talks to us each week at this time from World Headquarters in New York. Great to see you, David Weston. You're going to be coming up a little bit later on with an important conversation. I wonder how you see this when you try to get to these conversations about AI. You know, like we said earlier, you can go in one direction or the other, how it's going to ruin our lives, replace all of us, and leave us fighting robots, or in fact will make our lives easier and increase productivity. What are you learning?
Well, some of it I'm learning is that it's up to us to some extent, but whether it goes in one direction or the other, whether it's really beneficial or maybe it has some problems, it's up to us. But to pick up on what Kaylee just said, one of the elements is self-regulation. I don't think it makes much sense. You know Washington well. I spent a lot of time there. I don't think we should wait for Washington to sort this out. I mean, more power to them, but I'm not hopeful. So the industry now is stepping up already, the private sector, for some self-regulation. That's why we had Sam Palmisano, who is the former head of IBM, who's also co-chair now of something called the Data and Trust Alliance. He co-chairs it with Ken Chenault. You remember he was the CEO of Amex. And they've just come out with some guidelines, voluntary guidelines for industry to adopt. They've got 26 companies already, big companies, who've signed on to it. And we talked to Sam about exactly what this is and why they're doing it. This is what Sam did to describe it.
The ultimate goal is to have a definition, a quality definition as a standard for the data, just like we have in food and in product information and in finance with transfer of assets and value. Those standards exist. We have to do that for the data world. Now, that by having that transparency, you can minimize, I'll call the mischief that could occur within these systems.
Yeah, and it's more than just general language. They've got some detailed guidelines. They have 8 different parameters. And what they're pushing for is what's called metadata, which is sort of like a watermark that companies would, for their own data, attach to any data in there, which tells you where it came from, what restrictions there are on it, when it was created, any use restrictions, things like that. So that among companies, at least, enterprises, they have some basis to rely on the data and know they can use it. And by the way, also know what doesn't have the data, they probably can't trust.
Well, so it's an authenticity thing. Isn't authentic, wasn't that the word of the year, Joe, that we were talking about a few weeks ago?
That's the Webster word of the year.
But the other word I clung to during that clip you just played, David, was mischief. What kind of mischief when it comes to artificial intelligence is he most worried about?
Well, it's important, Kaylee, to focus on this is enterprise. This is not consumer facing. Although Walmart, which is one of the companies who's participating in this, said, but by the way, we will rely on these data and that will ultimately make it to our consumers to some extent, but it's enterprises. And the mischief is, of course, you gather up a lot of data from a lot of different sources. You're not exactly sure where it's coming from, and it makes it into your system, and you start reporting things that just aren't true. That just are, I think they call them hallucinations, right? They say AI has a tendency to hallucinate, and so this would minimize or eliminate hallucinations if it's adopted broadly. As I say, they've started with 26 companies. They're well on their way, and it's a very well thought. You can go on the website for Data and Trust Alliance, and you can see how well thought out it is and how it works.
That's pretty fascinating, and I do remember that conversation with the chatbot had with that New York Times reporter, convincing him his marriage was not sound. David, I don't know if AI is going to help us out of this inflation mess, but it was the people at the central bank this week making the news here, specifically Jay Powell. I know some of his remarks have been qualified, but we seem to be at an important inflection point, and I suspect you're going to be talking about that tonight as well.
Yeah, we got Rick Reeder on from BlackRock, and he found it truly extraordinary what the Fed did. Now, he thinks it was totally justified, but he did not expect it this quickly. One of the things he said was, I was surprised that they were willing to loosen financial conditions that quickly by saying what Jay Powell said in that news conference. He thinks it is justified given where we are right now. He thinks that this really means that bonds are going to be very, very attractive in the new year. And there's some hope for equities as well. He's very bullish on the whole thing. At the same time, he also announced a new ETF of his own because ETF is all the buzzword, right? The way to invest. And BlackRock has been the leader. They're getting a lot of challenge actually from Vanguard. But Rick has his second ETF now that he's very hopeful about that he announced with us.
Very cool. Yeah, I think it's an interesting point. His point on loosening financial conditions, that's exactly what we saw. Massive rally, bond yields dropping like a stone. And I wonder if John Williams of the New York Fed, when he was like, whoa, 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 hold on a second earlier today, was trying to push back on that a little bit. So you got Rick Reeder. You obviously have the former IBM CEO. What else is coming up on Wall Street Week tonight, David?
Well, we have somebody that's a fascinating investor in distressed investing, which you know well as private credit. And he's from Oak Hill Advisors, really knows this area very, very well. He just raised $2.3 billion for distressed investing. So as we're talking about off to the races for the markets and the economy, he's saying, yeah, but some stuff might not work so well. One of the points he made that we've talked about, but he was very emphatic about is we've got over $1 trillion that has to be refinanced over the next 3 years or so. And given the fact that we went from essentially 0 interest rates to 5+, there are going to be some companies that have a tough time handling that. So Glenn August will be with us, and he takes us through sort of the history of private credit, where it's going, and why he thinks private credit, you'll be surprised at that, I think, Kaylee. I was. I said, how far can it grow? He said he thinks it can triple in the next 5 years from where it is. It's 1.5 trillion now. He thinks 5 trillion is a reasonable number.
Incredible. We look forward to it, as always, with David Weston. Wall Street Week, that starts at 6 p.m. Wall Street time, which follows Balance of Power at 5 on Bloomberg TV and radio. David, we thank you. As always, we'll be watching and look forward to the conversation at this time next week with our friend David Weston in New York. We've got a lot to talk about on Balance of Power here, and the situation left, the work left undone, I guess, in Washington, at least on one side of the Capitol. The Senate, though, is apparently back next week. It's just a question of how long they stay.
Well, and if everyone actually comes back, because I feel like there's a lot of buzz in the Republican side that
might want to boycott
probably
that
not
idea.
worth it. Ultimately, they're just going to vote on some of those defense nominees, and who knows about a deal, but they're working at it, Joe.
We haven't mentioned the Tuberville blockade yet in this program. It could really come to an end next week, even if these 11 four-star generals are allowed to move on. We'll have more on that as we learn it. With Kaylee Lyons, I'm Joe Matthew. This is Bloomberg.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Costco has announced a special dividend of $15 a share as the warehouse club chain beat profit expectations for the fourth consecutive quarter. It is the company's first special dividend since late 2020, when investors got $10 a share, according to data compiled by Bloomberg. Chevron's Chief Financial Officer Pierre Breber is rebuking employees for failing to deliver on several key performance metrics in 2023, a year in which the stock lagged big oil peers. And with more on the story, here's Bloomberg's Denise Pellegrini.
Charlie, in an email to staff seen by Bloomberg, Breber said, "We've delivered industry-leading performance before, and we will do it again with consistent and disciplined execution." Chevron shares have tumbled 16% this year. That's a steeper drop than its super major peers. That's as the oil giant struggles with operational difficulties, from refinery disruptions to lower than expected production in the Permian Basin to the threat of strikes in Australia. And Breber's unusually blunt message, which made no mention at all of the holiday season, comes around the time Chevron typically pays those bonuses. Charlie.
And that's Denise Pellegrini reporting. We do have Chevron shares down now by 1%, Chevron lower, along with the price of crude oil. Crude West Texas Intermediate down by about 0.2%. Crude West Texas Intermediate down by about 0.2%. GM cutting more than 1,300 hourly jobs at a pair of plants in Michigan, less than a month after a new labor contract was ratified by its unionized workforce. GM down now by 1.3%. Those are our top company stories. This is Bloomberg.
You're listening to Bloomberg Sound On with Joe Matthew and Kaylee Lines on Bloomberg Radio.
Coming to you live from Washington, where the Senate's going to stick around, but the House is gone. Things are starting to quiet down as we head for the holidays. We'll see if we end up with a deal, Kaylee, on the border.
Yeah.
In the meantime, let's bring you up to date on world and national news. For that, we turn to Dan Schwartzman of the Bloomberg Newsroom in New York. Hi, Dan.
Hey, Joe and Kaylee. Just a day after Nassau County and Queens Republicans selected Long Island County lawmaker Mazi Melissa Phillip as their candidate to replace the disgraced and expelled Congressman George Santos, the Ethiopian-born former Israel Defense Forces paratrooper held her first press conference. Phillip says she stands against terrorism.
I stand strong with our communities in support of Israel, Ukraine, and all nations that are subject of terrorism.
That's Republican candidate for Congress, Mazi Melissa Phillip. Former White House Chief of Staff Mark Meadows has asked an appeals court in Atlanta to transfer state criminal charges against him to federal court. Meadows has been charged with election interference. A move to federal court would allow Meadows to argue he is immune from state prosecution because his actions were related to his job. A win for Meadows could prompt other defendants to ask to move to federal court as well, which would strike a blow to prosecutors. Reports say a multi-billion-dollar deal is imminent between Strategic Sports Group and the PGA Tour to form a for-profit entity, PGA Tour Enterprises. Strategic Sports Group is a consortium of billionaire American sports team owners, including Boston Red Sox boss John Henry, Atlanta Falcons owner Arthur Blank, and Wick Grossberg from the Boston Celtics. The group is expected to infuse over $3 billion into the new entity. If the PGA Tour does finally finalize, as expected, an agreement with the Saudi Arabian-financed Live Golf League and the DP World Tour, more than $7 billion combined could be put into the new enterprise. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Back to Joe and Kaylee.
All right, Dan, we do thank you as we get ready for NORAD to do its work on Christmas Eve. This is one of the great missions.
Santa tracking, yes?
Yes, exactly. The NORAD Santa Tracker. They will, of course, this is the former Continental Air Defense Command, put down their mission for one night to track Santa across the world. And you can, follow them online. And the kids get real excited about this.
Of course.
It's
very exciting.
Well, it is. Okay, well, the grown-ups do too. It came up at the Pentagon yesterday. We talked to Major General Patrick Ryder about a lot of stuff. The war in Ukraine, what's happening in Israel. Our Cold War, if we can call it that, with China. The administration does not want to call it that, by the way. But yesterday, an important question as we approach the holiday. Let's bring you to the Pentagon.
Can the Defense Department provide a breakdown of assets and personnel that will be involved in escorting Santa Claus on December 24th and 25th? Thank you.
Yeah, thanks, Jeff.
Straight question.
Unfortunately, that's controlled unclassified information. But I can assure you that we will ensure that Santa gets wherever he needs to go safely and securely.
Aren't you excited?
Very. I'm glad to know that Santa will be defended.
Imagine walking into the Pentagon briefing armed with that question.
Of all the questions one
exactly.
could ask. Do we think this was planted?
That's a pretty good question, actually, considering some of the issues that he's been fielding over there. Major General Patrick Ryder is prepared for Christmas, and I guess so is NORAD. Interesting, though, never realized how classified control and classified information about Santa, I suppose his whereabouts are carefully held, closely held.
Right. You wouldn't want a bunch of kids catching him coming down the chimney, right? It needs to be a surprise. You can't know the moment he's coming.
Absolutely. I'll tell you what, we've been talking about heavy-duty stuff this entire 2 hours, however fast they may be. We must remind ourselves that we're entering and are already in a special time of year, Kaylee Lines. And so we'll leave you with just a moment to think, just for a moment, before we get into Bloomberg Business Week, we get into the markets, the strife on Wall Street, the questions about the economy, although it's been looking pretty good lately, let's be honest. As you head into the weekend here, keep Kaylee and I in mind. We'll be back on Monday. We'll even meet you before then on Balance of Power with big questions about Christmas shopping and whether you've started to address what's on your list, Kaylee.
Still have a little bit left to go.
You haven't started?
I've started.
I started.
I have not yet finished.
I haven't received one gift, though. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenevec on Bloomberg Radio.
Good afternoon, everyone. Happy Friday, live from the Bloomberg Interactive Brokers studio. We're streaming on YouTube and Bloomberg Originals. It is December 15th, 2023. I'm Tim Stenevec, along with my co-host for the afternoon, Bloomberg News Deputy Team Leader for U.S. Equities, Jess Menton, in for Carol Masser today. Jess, good to have you back with us. How are you?
It's always a blast, and especially on a Friday. It's always a lot of fun. But then looking at where the NASDAQ 100 is today, though, on pace to close at a record, just on the heels. And you look at the Dow, third straight potential all-time high here, too.
Okay, potential. We are lower on the Dow right now. We're down by 0.2% on the S&P 500. The NASDAQ, though, is in the green. Little bit of a breather after the Fed-induced rally that we've seen this week. Stocks, Jess, are looking to cap off 7 straight weeks of gains. Get this, the S&P 500 is up more than 14% since just October 27th. We're all over the equity and bond markets this afternoon.
I mean, it's been a pretty stellar run here, but especially when you're thinking about off the back of what happened with the Federal Reserve decision on Wednesday. So Federal Reserve Bank President John Williams from New York pushing back against sort of this pivot narrative that we did hear from Powell and others on Wednesday. So we'll check in with our Fed team leader and cross-asset reporter about what exactly is going on, Tim.
And we're also going to go to Mexico to check in the lower expectations for Tesla's next massive car plant. That was set to be built in the northern Mexico desert. And Jess, this is something that I know is near and dear to your heart. It's Happy Triple Witching. We're going to explain the implications.
Yeah, Lena Popina talking about volume on call options traded at U.S. exchanges hitting an all-time high there and what that means for stocks. And also in the magazine, a powerful and disturbing investigation that spans continents on how pediatric cancer patients received contaminated chemo drugs, which led to 4 deaths and more than 100 falling ill, Tim.
We're also going to check in with Pick Day about what the firm says are investment opportunities in Asia. Plus, we're going to round out the program this afternoon with the Chief Operating Officer of LinkedIn. He's going to be joining us to give us an idea of what the job market is going to look like next year and what the role of AI is going to play, not just in how we get jobs, but the types of jobs that we're going to be seeing in the future. Looking forward to speaking with him in just a little bit.
It's going to be a great conversation.
It is going to be a great conversation. Yeah, we got a great program this Friday. Again, the NASDAQ 100 is set for all-time highs to close. The NASDAQ, the S&P 500 and the Dow both lower right now. Let's go to our TV colleagues. We got Scarlett Fu and Vonnie Quinn in right now as Bloomberg's countdown to the close of trading today starts right now.
Countdown to the close. Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is the countdown to the close. Scarlett Fu and Bonnie Quinn here with you on the television side, joining our colleagues Tim Stenovic and Jess Menton from Bloomberg Radio. And of course, we welcome everyone, all our Bloomberg audiences across television, radio, YouTube, and originals. And Tim, it is the season right now. There's a lot of people out of the office because of the holidays. They're getting an early start, but there's a lot of holiday partying and videos and music and meetings and parties taking place as well.
Yeah, there are. And, you know, some things are certain this time of year, right? It's the time of gift giving. It's a time of families gathering together. And it's the time of cringeworthy videos coming from some of the largest asset managers out there. And if you've been living under a rock for the past 24 hours, I'm talking about a couple videos that have come out already. One from Blackstone Group a little earlier this week, and then another one from Apollo. It sort of seems like they're trying to do this like ever since, you know, the last 5 years or so, this like one-upping of who can come out with sort of the most overproduced, elf-like, office-like holiday video.
Was that Torsten's Lock?
I don't know who that one was. This is Apollo's video that we're watching right now.
Yeah.
We're watching on YouTube.
Mark Rowan and Scott Kleiman there, of course.
Yeah, and then there's the Blackstone one as well, which stars none other than Steve Schwartzman in a Taylor Swift Eras jacket.
Really?
Yeah. Well, you know, you gotta embrace Taylor, right?
We're at peak Taylor Swift, basically.
Yeah.
And looking at Apollo, so this is a holiday video that we have on the terminal. So it's sort of poking fun at Mark Ronan's no new toys mantra. So Ronan has frequently used the phrase when asked to describe his goals for the year. And apparently at a conference in January, he detailed Apollo's growth since 2008, saying that he meant when you're looking at we have enough in-house today and the tailwinds of our business to accomplish our 5-year plan, though. But it's funny when you're seeing how he also talked about how the bar to doing anything new, a new toy, is actually really high, but that's something where you can watch that video on the terminal.
You can, and also I just wanted to tell the both of you that your call time's tomorrow morning 5 a.m. because we have a video to do apparently. I'm not quite sure what the script is going to be, but I think I can count on Tim and Jess and Scarlett to come up with something good.
You know, I'm going to stick to this. There are some folks, though, in those videos, I would say, Vonnie, that actually seem like they're pretty good in front of the camera, pretty good on screen.
Yeah.
But, you know,
well, they've had a couple of years to practice and perfect their craft, right?
I'll leave to the acting to the professionals.
I can see the memes already. It's going to be insane on Instagram.
All right, well, it is the season for holiday parties and holiday videos. It's also the season when high school seniors get their decisions on their early college applications. And what we learned was that Harvard received 17% fewer applications for early admission from high school seniors this year. That's the lowest in 4 years. And Tim, given how early a lot of these high school students start working on their essays, I wonder how much of this you can link to the controversy tied to the way that the Harvard College president and presidents of other Ivy League schools responded to the Senate's line of questioning over charges of anti-Semitism on campus.
Yeah, it's a point that Janet Lauren raised in her write-up of this data that we got a little earlier this afternoon. We should note that the applications were actually due before we did hear from President Gay, and 2 other college presidents in front of the House earlier this month. However, it was in the wake of the October 7th attacks on Israel by Hamas, and a lot of the anti-Semitism that was alleged to have occurred at a lot of these universities. So one college counselor who did speak to Bloomberg News said, hey, that likely has something to do with it, but there could be some other elements at play here too that are completely removed from the ongoing war in Israel.
Absolutely, and you'd want to dig into the data a lot more to know who exactly were these 17% and, you know, what proportion of the different demographics were they, but it's certainly a very, very interesting insight into this year's crop at Harvard and some of the other elite universities, and I'm sure we'll get lots more data on this before the academic year is out.
Well, it's worth noting that Yale, of course, a Harvard rival, received a 1.4% increase from the previous year, and applications at Penn, which was just as much under fire and saw its president ousted, increased to more than 8,500 from just over 8,000 last year. So it's a little bit singular to Harvard, at least in this cycle.
Yeah, we'll have to wait and see if this is just a blip in the data or if this is some sort of bigger trend. Something tells me it's just a blip in the data, but you know.
Yeah, the Harvard brand is kind of out there and, you know, doesn't diminish very easily.
I think that's certainly fair to say. Hey, you guys don't go too far because we're going to be back with you in a little under an hour, but that is going to do it for now. We're going to be back together again live on TV, radio, and on YouTube, on Bloomberg Quick Take too, 4 p.m. for our Beyond the Bell coverage when we take you through today's market close. behind. They're down 0.2% right now. This all following dovish signals from the Fed. All that said, New York Fed President John Williams pushing back a bit on the pivot narrative, telling CNBC earlier today that it was, quote, premature to be thinking about a March rate cut. And earlier this afternoon, we did hear from Atlanta Fed President Raphael Bostic, who told Reuters that the Fed can start cutting, quote, sometime in the third quarter of 2024. That is, if inflation falls as expected. So kind of a few caveats here.
There are.
Well, to help us explain what exactly is going on, we turn to a couple expert voices. We got Kate Davidson, Fed team leader here at Bloomberg News. She joins us on Zoom from our Washington, D.C. bureau. Also with us is Denitsa Sokova, cross-asset reporter at Bloomberg News. She's here in the Bloomberg Interactive Brokers studio. Kate, I want to start with you and just get an understanding of what's going on with Fed Speak today. We got, as I mentioned, Raphael Bostic and John Williams speaking a little earlier, not saying that they're completely throwing water on this idea of the Fed pivot, but they're sort of saying, okay, hold on, not so fast. How did you interpret these comments today?
Right. They were definitely unusual, right? I mean, when you have the New York Fed chairman, clearly a key sort of ally and communicator on behalf of the committee, coming out as soon as the Fed's blackout period lifts, right? Like first thing Friday morning, you can either usually expect that that person, is going to affirm what the Fed chairman said, or in this case, kind of soften it and walk it back. Obviously, we heard the latter. I mean, I think that what was really striking is that I think that what the most forceful comment he seemed to be making was that March was really premature. So, I think clearly you can see that the markets are ahead of the Fed in terms of what Fed officials wrote down, right? They're only penciling in 3 quarter point rate cuts next year. So clearly there's a little bit of a divergence, but it seemed like what he was really trying to make a point in saying was that it's, the beginning of the year, the first quarter is way too early to really be thinking about or expecting the Fed to make a move.
Denitsa, I want to bring you into this conversation. Walk us through this massive cross-asset rally that we've seen in response to the Fed's decision on Wednesday.
Markets have been euphoric following the decision. And actually, some of the Fed speak we heard today hasn't done much to persuade them that those rate cuts are coming. So currently, markets are betting for 150 basis points of rate cuts in 2024, which is pretty much double than what the Fed suggested on Wednesday. But, it's that type of trend of markets front-running. In terms of cross-asset rally, we've actually seen 8 weeks of cross-asset rally between stocks, credit, and treasuries, which really strong. For S&P, this is 7 consecutive weeks. So there has been a lot of euphoria. Positioning has been flipping. We saw, obviously, treasuries, a really massive change in positioning there. We saw speculators move from short positioning to long positioning in 10-year treasuries. So there has been very rapid shifts. A lot of defensively positioned investors haven't had any other choice than chase the rally in stocks and buy bonds as well. So those shifts continue despite the pushback from the Fed today.
Denitsa, are there any bears left out there?
There are some bears, but obviously a lot of them are flipping their playbooks. We even see more people today changing and scrapping to keep up with the Fed, because people were saying, "Oh yeah, we were predicting 4% for the 10-year at the end of the year, and now we're scrapping those targets. We're starting from scratch. We're changing them." We saw Goldman Sachs is predicting rate cuts as early as March. All those strategies just released all their outlooks, and now they're pretty much changing them. And it's like, well, this is a new environment. We're preparing for a Fed pivot. So everyone is scrambling right now to prepare.
Hey, Kate, I want to bring you back into this conversation, because another thing beyond just when we're talking about potential rate cuts next year, you also have what's going on with the balance sheet in the background. Walk us through the dynamic there, where if there are potential rate cuts, what about the balance sheet?
Right. Well, Fed officials, even in previous episodes of quantitative tightening, they always say that they just want the balance sheet to be kind of like paint drying, just in the background, not something that they're using as an active policy tool. And they've pretty much continued to say, the same thing. I know we're chatting with our colleague Alex Harris, who pays very close attention to this, and she was saying, boy, she would have liked to hear a little bit more, or a lot more from Chairman Powell, his press conference on Wednesday. Wednesday. He did get one question at the very end, but he didn't really offer up a lot of clues about how they would treat that. But I think we can expect that they're going to want to avoid doing too much, tinkering too much with that tool. And we did hear from John Williams this morning saying that he thought that reserves were still ample. So again, suggests that it's not something that they're really thinking about actively right now.
Kate, speak to me as somebody, who's been leading the Fed team this year in terms of how surprised you were with the change in tone in such a short time from Jay Powell. We heard this a lot this week, the change in, less than 2 weeks, the way he talked about how holding higher rates for longer just at the beginning of December, and then talking about cutting them at the meeting on Wednesday. How did that catch you?
Yeah, I mean, it definitely was surprising, and I would say even we were surprised. I think that there's been a sense that Fed officials throughout the fall have been feeling increasingly good about what they're seeing, and that they really have been reluctant to say too much about that, right? Because they don't want to spur more of a rally, and then we kind of saw the financial conditions tightening after the September meeting when they sent that strong signal about rates staying higher for longer. So I think that we had a sense from just listening really carefully, reading between the lines, talking to our sources, that again, that Fed officials were feeling like they could sort of see the soft landing in their sights. They were feeling more confident about it. They were feeling more confident about inflation, but the assumption was always that Jay Powell himself was going to be the last one to declare victory, and certainly he didn't declare victory on Wednesday, right? He did make a point of saying very early on, as soon as he came out, look, we will tighten again if we need to, but it didn't feel like there was a lot behind that, right? It felt a little bit hollow when you looked at the dot plot, and then even when he went ahead and said, yeah, everyone's talking about this and so are we, but it was kind of surprising that he did come out and say it, and it was surprising for the reasons I think then we saw the way that markets rallied. So again, looking to this morning, was this an effort by the Fed broadly to kind of have John Williams go out there and cool things down a little bit? It certainly seems like that.
Hey, Denitza, when it comes to the calendar coming up the next couple of weeks, obviously a lot slower now that we've gotten past the Fed meeting. We only have one scheduled Fed speaker next week. Raphael Bostic is going to speak again after we did hear from him today. But what's on your radar that you feel like traders are really focusing on when it most likely will probably be more of a lighter volume the next couple of weeks heading into year end?
For sure, yeah. I think the next, obviously this week was the one with the big catalyst, and going forward, you see markets are obviously very sensitive for any type of direction when it comes to rate cuts, especially after this Wednesday. But that said, the reaction today was very muted, and markets turned green quite quickly after the Fed speak. You can imagine that if there is more Fed speak and there are more people pushing against that narrative, maybe those rate cut expectations will change quite rapidly. But as of today, they're pretty close still to 150 basis points, and they moved like just a couple of basis points after the announcement. So I would say until the end of the year, there are not really big catalysts or economic data that could potentially move markets as much. But one thing we should be aware of is that positioning has moved very sharply, both in stocks and bonds. So I would say any small negative surprise can potentially have a bigger impact on markets now.
Just in the last 30 seconds, Denitza, are there any technicals that could be at play in terms of like overbought elements here?
Yeah, a lot of indicators are showing that positioning is being stretched. We saw that a lot of the shorts have been unwound, so there isn't really that dry powder and that support coming from technical buyers like CTAs. So definitely stretched positioning can be a problem for markets going forward, and we can see markets being more prone to a sell-off.
Well, a big thank you to both of you for joining us this afternoon. An absolutely all-star roundtable with Kate Davidson, Fed team leader at Bloomberg News, on Zoom from Washington, D.C., along with Denitza Sakova, cross-asset reporter at Bloomberg News. I'm Tim Stenovic. That's Jess Menton in for Carol Massar this afternoon. We're just getting started on this Friday. This is Bloomberg Business Week.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got U.S. stocks trading mixed. The S&P 500 index and the Dow Jones Industrial Average, they are both lower right now. 33-point drop in the Dow Jones Industrial Average, down by about 0.1%. The S&P lower by 6 now, down 0.1%. Now keep in mind, Dow Jones Industrial Average have been on track for a third day of records before retreating late morning. Again, the Dow now down by about 0.1%. Nasdaq 100 index, Nasdaq Composite Index, I should say, up by 40 points right now. That is a gain of just about 0.3%. Nasdaq 100 higher by 0.5%. 10-year yield right now 3.91%. We have got the 2-year yielding 4.45%. So bottom line, we are looking at a mixed day on Wall Street. Gold down $18 the ounce, down 0.9%. West Texas Intermediate crude down 0.1%. Nat gas is advancing by 3.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Hey, check out the new Bloomberg Business app. It's featuring Apple CarPlay and Android Auto. Here's what you can do. You can listen to Bloomberg Business Week and all of our Bloomberg radio programs at any time. All you got to do is just download the Bloomberg Business app on your smartphone and then connect your phone to your car. It's free in the Apple App Store or on Google Play, thanks to our sponsor, Interactive Brokers.
Nice. Well, switching gears here, Tim,
Ooh,
taking a look at when Tesla moving over, sharp turn there, settling on the Nuevo Leon site in northern Mexico for its next massive car plant. Only 9 months ago, politicians and executives actually hailed it as a paragon of nearshoring, the idea that international companies will set up much more of their production in Mexico to be closer to the U.S., Tim. So the company investment in the country is expected to reach about $10 billion over multiple phases, but construction of this factory, which had been slated to make Tesla's cheaper next-generation vehicles, is delayed due to Elon Musk's misgivings about the global economy. Other problems, including permitting delays and a dearth of infrastructure, have plagued the process. So joining us to walk us through some of these issues here, Amy Stillman is Bloomberg News Mexico business reporter, and she spoke to some locals who are now lowering their expectations as the car maker has held off on starting construction. So Amy is joining us on Zoom from Mexico City. Walk us through these issues. How did we get to this point, Amy?
Great, thank you, Jess. Yes, well, certainly when it was first announced that Tesla would be setting up a factory in Mexico at the start of March, people were very excited. The local politicians, hailed it as the beacon of nearshoring, that, this is going to bring a huge amount of investment to Mexico. And it was also viewed by residents in the area as a great boon for the local economy. Now, fast forward about, 9 months or so where we're at now, and really there's been no activity whatsoever. I went and visited the site. It's essentially, sort of desert along the highway with cactuses and no real construction going on. And one of the issues is that Tesla is still yet to receive certain federal and state permits for the construction. They have received a permit for the land use, which is a very, very recent phenomenon that just happened this week. But essentially, there is an issue around delays to permits as well as a lack of infrastructure. Elon Musk has requested that the government help in terms of road infrastructure. There's another issue around water access as well. And then you add those issues happening in Mexico to the fact that the global economy isn't doing as well, that Elon Musk doesn't see as much demand. So there's really been quite a significant change in the way that Tesla has been viewing Mexico.
What would you say is the biggest factor here? Does it come from Tesla, Amy, or is it coming from the Mexican government, given that the company is looking for concessions here that perhaps the government isn't willing to just hand out?
That's a great question, and certainly it's nuanced. you have a few opposing forces. The local state government is extremely keen on Tesla coming. In addition to that, that permit that I mentioned that was recently approved, the state government has also just said that they're going to provide a $153 million incentive for Tesla to come to, to help with the road infrastructure and also a reduction in the taxes around the payroll. They've done a ton. The governor has done a ton in terms of advertising around the fact that Tesla is coming. At the same time, the federal government has really tried to push forward development of the south of Mexico, not the north, which is where Tesla is headed. And there's been some concerns from the federal government that perhaps the investment should be in this other part of Mexico where there's more poverty. So there are some questions around whether the federal government will throw its full weight to bring Tesla over. Now, when it comes to Elon Musk, certainly, he seemed very enthusiastic about the project. It does raise a few questions whether perhaps some of the difficulties that they've seen have, changed his mind. He did announce in a recent interview that they're going to be working on the next generation, more affordable entry-level vehicle from Texas first, and then Mexico, because the plant won't be ready. So it's a little bit of both sides.
What do you think the potential repercussions for Tesla would be when it comes to production?
Right. Well, I think certainly we're going to see, a delay with the production. There was some speculation about whether the plant would be built at all. It certainly seems that, Tesla will continue to pursue this, that it will be constructed. But certainly the idea here, what local officials had said in the beginning was that, we were going to see production start possibly in 2024 next year. Now they're pushing that number back out to 2025, possibly even 2026. So that would certainly affect the rollout of this new generation vehicle. Much will obviously depend on, how quickly they can get the factory up and running.
Amy, give us an idea of what's at stake here. I mean, after all, a auto factory is something that politicians in the U.S. fight over against one another because the economic impact of something like this can be so huge. It's not just the people who are hired at the plant. It's the ripple effects throughout a local economy of those, high-paying jobs. What's at stake here?
Yes. Well, that's certainly very much the case. And, as I said, the Tesla plant has really been the poster boy for this move toward nearshoring, which is, companies looking to invest closer to the U.S. And certainly if this plant, doesn't get up and running, that will look pretty poor. It doesn't bode well for other companies that are looking to set up here. At the same time, what we've seen is a real huge influx of suppliers to Tesla, that a lot of companies have come over, especially from China and other places, to be able to supply Tesla in Mexico. So they're starting to set up. So it will be very interesting to see as well, whether they're going to be able to continue with their plans. One company in particular that I spoke with, Yinlun from China, had said that, well, right now we're supplying to their Austin factory, but we set up here for the Mexico factory. So I'm sure they're also, highly anticipating that Tesla will get started. At the same time, the residents, as I mentioned, were very excited about the arrival of Tesla. There's still cautious optimism that this will help propel the local economy, help create jobs, not just in the Tesla factory, as you pointed out, but also, all the suppliers that are arriving and all of the supply chain that will require employees.
And you're speaking about those local residents. What are some of their top questions right now in the wake of all of this unraveling?
Well, certainly a big question is how soon will Tesla get up and running? I think that's definitely on everybody's minds. At the same time, there are certain questions around also, the talent, the labor pool. Residents are very excited about the opportunity to work for Tesla. I've also spoken to some local business owners. Funnily enough, there are some competing businesses that are less excited. They're worried about the talent being suctioned up by the Tesla factory. So there are some competing competing forces, but certainly overall people are waiting. People are excited. They hope that more jobs will come.
Yeah, I guess the question that I have is, what kind of moves the needle here? What are you watching to see whether or not this factory actually happens? Is it a global change in demand for EVs? It's something that we've covered a lot here, especially when it comes to American companies like GM, Ford, and Tesla facing waning demand. Or is it something that comes from, I don't know, perhaps something else? I mean, at the end of the day, Elon Musk is the one who makes this decision, Amy.
Of course, and I think certainly there are pressures to get moving on electric vehicle production. Tesla's not the only company. You mentioned a few others that has said that they would look to EV production in Mexico. We've seen a lot of big players, BMW, Ford, a few others that have also said that they would be looking to EV production. I think a lot of those big companies are waiting to see what happens with Tesla as well, to see whether Tesla can achieve this goal. Will they move a bit quicker? Right. At the same time, you've got a pretty strong competition from some Chinese players like BYD. Tesla and BYD have been neck and neck, and that will certainly play out in Mexico, where BYD has announced recent partnerships in Mexico, is currently selling electric vehicles.
Whatever happens, we're going to be sure to have to check in with you. That's Amy Stillman joining us live on Zoom from Mexico City. Check out her story and more on the Bloomberg Terminal and at Bloomberg.com. Let's get a check on the latest world and national news. We got Dan Schwartzman in the Bloomberg 1130 newsroom in New York. Hey, Dan.
Hey, Tim and Jess. One day after Nassau County and Queens Republicans selected Long Island County lawmaker Mazi Melissa Philip as their candidate to replace expelled Congressman George Santos, the Ethiopian-born former Israel Defense Forces paratrooper held her first press conference. Philip tells us where she stands on taxes.
As a county legislator, I supported 2 tax-free budgets with our county executive and my colleagues in the legislature. I am the only candidate in this race who can say that I have not supported tax hikes.
That's Republican candidate for Congress from Long Island, Mazi Melissa Philip. The Israeli military says that it mistakenly killed 3 hostages while conducting operations in the Gaza Strip. The Army's chief spokesman, Rear Admiral Daniel Hagari, says troops had mistakenly identified the 3 as a threat. It is yet not clear if the hostages had escaped their captors or were abandoned. The Army has expressed, quote, deep sorrow for the mistake and are conducting an investigation. Container shipping giant Maersk has told its ships heading toward the Red Sea to stop after one of its vessels was attacked by Iranian-backed Yemeni Houthi rebels. This marks the 2nd day in a row that a Maersk ship was attacked after the Maersk Gibraltar was involved in a near-miss incident. The Houthi militants have been attacking merchant ships in the Red Sea, especially ones they believe are connected to Israel. Around 12% of global trade passes through the Red Sea. A storm will be forming in the Gulf of Mexico starting later this evening, with Florida expected to get hit hard on Saturday, with parts of the East Coast also being affected through the weekend. Coastal hazards, along with heavy rainfall and strong winds, are expected to hit as far north as Maine by Monday afternoon. Lots of rough weather coming up this weekend along the East Coast. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. We do check markets all day long here at Bloomberg. We've got U.S. stocks trading mixed. Let us head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. That's right. U.S. stocks quiet in mixed trade right now, with the Dow currently up or down 35 points. S&P's drop 8, and NASDAQ is higher by 46. The U.S. 10-year yield at 3.91%. Gold is down 17. Oil is little changed, and Bitcoin is lower by 1.9%. Among the main 11 S&P sectors, leaders were tech and consumer discretionary. Utilities and real estate were under pressure, and leaders to the upside, the Dow, Boeing, and Intel, while Verizon and McDonald's led to the downside. In the chip space, Broadcom rose for a 7th day to a record. And in other news, Fed's Bostic sees 2 rate cuts in 2024. Wrapping things up, Costco rose 5% after earnings to an all-time high. Live from the first breaking news desk on Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on the Bloomberg terminal. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
Well, here we are. Hard to believe it's already close to the end of another week, and it's another week of green. Look at that.
So much green.
Yeah, the S&P 500 is on track for its 7th straight week of gains. That, if it holds, which it looks like it will, would be its longest winning streak going all the way back to 2017.
Wow.
Yeah, look at that. We'll see if what happens next week.
Yeah.
Let's go to our Drive to the Close guest. We got Brooke May, managing partner at Evans May Wealth, joining us on a Zoom from Carmel, Indiana. Good to have you with us, Brooke. How are you?
I'm well, thank you. How are you?
Doing pretty well. Did this rally, starting back in October, on October 27th, up about 15% on the S&P 500 since then, did this catch you off guard?
A little bit. We were optimistic going into year end. It tends to be a good time for the market. November and December tend to be two of the best months. So we weren't completely caught off guard, but 15%, that's more than we expected.
Brooke, whenever I spoke with you in the last couple of weeks, you were talking about leading into this Fed decision earlier this week that the Fed fears that any signal from policymakers that a rate cut could be coming may cause another big rally in asset prices. And we got a big rally there. But what's your take on the way that Powell's tone was in this particular speech? Because a lot of people were thinking he would push back harder against that, but not quite as much ended up as people and investors were thinking.
Yeah, I was in that hawkish camp. I thought that the comments were going to be erring on the side of caution to ensure that we didn't get that asset price elevation that we saw. So his comments, indicating that rate hikes will be coming. Obviously, the market responded favorably. He didn't say when, though, and I think that a lot of investors have started to price in the first quarter, and I don't think that'll be the case unless we see unemployment tick above 4%. I think
You don't think the Fed is going to cut rates in the first quarter unless unemployment goes above 4%?
I don't. I think they're going to take the opportunity to be patient. We're clearly now on that path to 2%, which is the phrase that they had been using for several quarters. We're on the path at this point. There's no question. And so are they going to wait until we get to 2%? Probably not. But they're going to have the ability to be patient if unemployment stays sub 4%. And right now, with the economy looking the way that it is, it's very possible.
So given that that's your thought, do you think that the markets are kind of over their skis when it comes to expectations for rate cuts?
Yes, I do. But that doesn't mean that we're expecting or forecasting a crash or a significant pullback in the market. Right now, any type of pullback we're going to see as a buying opportunity. When we look out to the end of 2024, our price target is 5,200 to 5,400 on the S&P, which a few weeks ago seemed like a stretch, but with the rally we've had, that's really only 10 to 14% upside from here. So if we see the earnings growth that we're expecting, we think that we'll see earnings up 11% from this year to next year. At 19 times forward earnings, it's reasonable that we could get there. When we look at Q3 earnings announcements, companies, they were able to prove that they can navigate a higher interest rate environment. They've had 2 years to prepare. So we think that that'll continue where earnings are a little better than expected, and therefore the market will continue to rally.
When it comes to some of those buying opportunities, how are you advising clients to position? What are you telling them to buy? What are you telling them to sell?
We don't think you can be sector specific or really even asset class specific right now. We're taking kind of a bottoms up perspective. We're looking at individual companies one by one. As you can see, the Russell 2000 has really rallied the last few weeks. And if you peel it back and look at Russell 2000 companies, about 30% of their debt is at variable rates. So they're not necessarily in the clear yet, especially considering that only 60% of Russell 2000 companies are actually profitable. So we're going to be very selective. It doesn't mean we wouldn't buy small caps in this environment. We think that that environment is improving, but we're going to look at the fundamentals for each company, and we want companies that have low leverage and strong balance sheets, really good free cash flow.
How are you looking at fixed income right now? And I just want to bring our Bloomberg audience a headline that crossed the Bloomberg terminal moments ago. The Treasury 30-year yield falling below 4%, the lowest since July. So we're seeing yields fall at the long end of the curve, but move higher today at the short end of the curve. Still, the drop in yields that we've seen in such a short time has been pretty remarkable. How are you watching the bond market?
It really has been. Remarkable is a great word to describe it. We got excited about bonds 5-6 weeks ago whenever
that was a good time to get excited about bonds.
Hit 5%.
In hindsight.
We are equity biased. Over 80% of our portfolio is allocated to equities. Our clients are high net worth and ultra high net worth. And oftentimes they've been investors for decades. So they're comfortable with that volatility, and we've over allocated in that space. But a few weeks ago, we said, you know what, it's time to buy some bonds because we could get really good yields on municipals and high quality corporates. Now we're kind of back to a level that we've been seeing, over the last few years or so. So we're not as excited, but for our clients that do have a small allocation to bonds, we think that they'll have decent returns over the next few years.
We've seen the 10-year Treasury yield come down a percentage point since October 19th. That's when it briefly crossed above 5. But at what point, because clearly this has been supportive for equities as we've seen yields come down dramatically. But in your view, when it comes to fixed income, at what threshold are you watching to where yields are coming down so quickly that it's more of a concern about potentially the economy?
Yeah, the bond market tends to be a great leading indicator, oftentimes better than the stock market for what's to come. And right now, we think the 10-year Treasury will be in a trading range from 3.8 to 4.5%. And so if we see a significant drop below 3.8%, that would be telling that there might be some issues right around the corner. But right now at these levels, we feel like it's not signaling that anything of a significant magnitude is going to occur in the near term.
How much do equity markets have to drop for you to see a buying opportunity in the next few weeks?
3%, 5%.
So a bigger
we tend to
pullback.
be fully invested.
You said you are fully invested?
We are. We tend to stay fully invested. We keep minimal amounts of cash on the sidelines. But for clients that are depositing money or wanting to dollar cost average in, we're telling them right now, let's not wait. Any pullback at all, let's go ahead and get invested because you can't time it. And we think the next 6, 12, 18 months are going to be really good for the market.
Brooke May, thanks for joining us and taking the time this afternoon. Really do appreciate it. Brooke May is managing partner at Evans May Wealth. She joins us this afternoon on Zoom from Carmel, Indiana. Taking a look at the equity market for this Friday afternoon. The Dow's pretty much flat, down fractionally right now. The S&P 500 down a little more than 0.1%, but we got the NASDAQ composite higher right now by about 0.3%. Don't go anywhere because we are just about 10 minutes away from the U.S. market close right here in New York. This is Bloomberg Business Week.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. Deutsche Lufthansa is resuming flights to Tel Aviv early next month after suspending services in the wake of the conflict between Hamas and Israel, becoming one of the first major carriers to come back to the country. We've got Deutsche Lufthansa shares trading lower now by 1.3%. Citigroup is shutting down its municipal business. Bloomberg's Sally Bakewell explains why.
Unfortunately, this business became somewhat incompatible with CEO Jane Fraser's goals to improve returns at the bank, which has increasingly been missing targets that it's set, and the bank really wants to prove to investors that it can indeed set targets and meet any guidance that it gives.
And Citigroup shares down 1.1%. Bloomberg's Sally Bakewell reporting earlier this week, sources told us that Citi is offering to pay some employees a portion of their bonuses early if they agree to leave, as executives continue to restructure the firm. In the meantime, Citigroup is once again allowing most of its employees to work from anywhere in the final 2 weeks of the year. DocuSign shares now surging by 12.6%. Stock is soaring, the most intraday since December of 2020. 22 following a Wall Street Journal report that the e-signature company is working with advisors to explore a sale. The report said the conversations are in the early stages, the Journal citing sources. Again, we do have DocuSign up 12.5%. Those are our top company stories. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
It's Bloomberg Business Week on this Friday afternoon. Tim Stenovec and Jess Menton in for Carol Massar. Jess, I got a fun real estate story that I want to talk about with just about 4 minutes to go here until the closing bells. It's about how condo buyers here in Manhattan and other parts of New York City who have been buying apartments and condos and homes and LLCs to shield their identity, they might actually lose that ability to keep their identity secret. That's if a measure before Governor Kathy Hochul becomes law.
Ooh, this is actually really fascinating, and kind of what potentially could be the repercussions there for if this goes through. So limited liability companies have been listed in public records, as you were talking about, as buyers of countless New York luxury apartments. Almost all of the deals apparently legitimate, but what you were talking about, this sort of secrecy when it comes to these LLCs makes them useful in sort of concealing apparently financial crimes. So by the end of next week, apparently, when you're looking at this, there's either a sign or a veto when it comes to this bill that would create a public database of shell companies unmasking, like you were talking about, the rich, famous, and sometimes criminal owners, Tim.
As a journalist and just generally curious person, I would say that this would be fantastic because it is so easy. Right. Well, it's so easy to find out who lives in a building or in an apartment in New York City. There are like websites where you just type in the address.
Yeah, people might not realize that, but as journalists, we can find people.
It's so easy. It's all public record.
There's
something called ACRIS that New York City has. However, if it's an LLC, it's harder to find that out. It's not always people who are trying to cloak their identity for nefarious purposes.
Which is a good point.
It's also people who, are perhaps public figures or celebrities that want privacy. And in fact, that's kind of the sentiment that Bloomberg News heard from Leonard Steinberg, a Manhattan-based sales exec at Compass, who said the bill would probably help TMZ more than it'll help anyone else. Yet advocates argue the measure would root out so-called bad actors who hide behind LLCs to launder money.
So this is going to be really fascinating to see how all of this comes about and what happens with that. Because like you were saying, some of it potentially may be concealing financial crimes, but then other people that benefit from it if they are popular, big public figures.
Yeah, we'll have to wait and see what the governor ends up doing. Hey, don't go anywhere. Coming up next, we're joined by our Bloomberg TV team for our cross-platform coverage. Bloomberg's Beyond the Bell starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
Just 2 minutes away from the end of the trading day and week, Scarlett Fu and Vonnie Quinn here with you, counting you down to the closing bell, and here to help us take you beyond the bell with a global simulcast. Our colleagues Tim Stenovec and Jess Menton in for Carol Massar, bringing together Bloomberg Television, Bloomberg Radio, YouTube, our audiences worldwide, anyone streaming. We're going to parse through some of the most crucial moments of the trading day. Was there a crucial moment in this trading day? It seemed like we got off to the races in the morning and then it just kind of faded.
I mean, I think the crucial moment of the trading day actually happened before the day began, before the cash markets opened, and that was a John Williams interview, New York Fed president on CNBC a little earlier, who pushed back against the kind of timing of a Fed pivot. And then you had Raphael Bostic a little later telling Reuters of the Atlanta Fed that, we could see cuts next year, but it would be sometime in the third quarter of the year. But that's only if inflation falls as expected. So I have to be honest with you guys. I'm a little surprised that we're not seeing more of a pullback when it comes to equities, given that we did hear from two Fed speakers today who kind of are trying to, it seems like they're trying to do, I don't want to say damage control, but kind of pull back on the messaging a little bit.
But also we were promised volatility because it is triple witching. So you had about 88% rather of the S&P 500 market cap set to expire when you are looking at those options that are linked to it. But you look over at the VIX just trading around 12. But the NASDAQ 100 though holds these gains on pace to close at an all-time high for the first time in about 2 years, Vani.
Yeah, it's fascinating, isn't it, Jess? I mean, this whole market is just unbelievable. It's so, in a way, very easy to understand, and in a way, not so easy to understand. You know, we'll be looking at some individual movers in a few moments, but certainly it's another day where traders are breathing a sigh of relief, I think, you know, with everything that was going on, including the triple witching. There wasn't too much damage done, let's put it that way.
No, not at the end. Clearly, a little sign of volatility when you look at the closing numbers there for the Dow, the S&P, and the NASDAQ. Little change for the S&P 500 at 47.18. The Dow Industrials gaining 57 points to 37,305, and the NASDAQ Composite adding about 1/3%. Remember, these are indexes, especially for the NASDAQ 100, the Dow and the S&P, that are at or near record highs already.
Yeah, I got to tell you, I was going back and looking at just the gains that we've seen on the S&P 500 since September. We're up, Vani, more than 14%, since October, since late October, October 27th, more than 14% on the S&P 500. I think this rally caught a lot of people off guard, and that's a very big move in a very short period of time.
Certainly is, and if you look at group ranked returns, you'll see that, you know, there are definitely as many groups higher as there are lower today, and lower by, you know, a startling amount in some cases. So, for example, the Alternative Carriers Index up 8%. We have hotel and residential REITs up, you know, more than 3.5%, whereas you have the office REITs down 3%. So there's a huge amount of dispersion in this market, and it's just fascinating to watch because we obviously got plenty of data too, including the Empire Manufacturing data, which was disappointing and would have impacted some of these stocks.
All right, well, speaking of stocks that were affected today, let's take a look at some of the gainers on the day today. No shortage of these to keep an eye on. Shares at Costco actually hit an all-time high today, closing higher by more than 4.4%. Shares closing up $28 just after the company announced a special dividend of $15 a share. This is the company reported a beat in profit expectations for the 4th consecutive quarter. The company has shown quite a bit of resilience, especially when you compare it to Sam's Club, which is owned by Walmart. They struck a cautious tone when they reported earnings last month. Costco, by the way, up more than 40% so far this year. And then also taking a look at shares of Intel, rising today to a 52-week high, finishing the day higher by a little more than 2%, though earlier in the day it was a little bit higher. The company took the wraps off of new chips for PCs and data centers. Intel looking to break into hardware for AI. We did see in the wake of this unveiling, Bank of America Global Research raising its recommendation on Intel from underperform to neutral. And finally, how about a little M&A news on this Friday afternoon to get a stock moving higher? Shares of DocuSign surged this afternoon after the Wall Street Journal reported the company was considering a sale, closing higher by more than 12.4%. The Journal reporting, citing unidentified people familiar with the situation, that DocuSign is working with advisors to explore a leveraged buyout, though the talks are in early stages. So there's a little bit of M&A happening here. Potentially.
I'll grab some of the decliners here, Tim. So first off, I'm going to look at Scholastic. So shares, actually, if you look at this ticker symbol, SCHL, down close to 12%, so it's its worst day since September 22nd of earlier this year. This is a publisher of children's books, cutting it adjusted EBITDA forecast for the full year. So it did note that there were challenges in the retail market. Another stock I'm keeping a close eye on, Exelon. So this is among the biggest decliners in both the S&P 500 as well as the NASDAQ 100. That stock down more than 6%. It's actually just its worst day since yesterday, but extending those declines. Apparently, power utilities in Illinois were hit hard because there were diverse decisions by state regulators actually in the middle of yesterday. So that did prompt Wall Street downgrades. So you have Exelon, it owns Chicago area utility companies, especially ComEd as well. And so it did cut neutral from buy actually at both Bank of America as well as Guggenheim Securities, and to inline from outperform if you are looking at Evercore. Another stock I'm keeping an eye on lastly though, Quantex, NX is the ticker symbol on this, down about 11%, worst day since March 10th. So that was a while ago, and that was in the midst of what was happening with the regional bank crisis. But you are seeing that stock pressured. It just only has a market cap of around $1 billion, but it did reverse prior session gains after the company did report EPS above estimates and sales in line with estimates, Scarlett.
All right, let's take a look at the fixed income space and treasuries. You do have some buying at the long end of the curve. So yields on the 10-year, 20-year, and 30-year coming down. And in fact, the yield on the 30-year dipped below 4%. So, you know, that is a headline that we can't repeat often enough, given the mammoth moves that we've seen this week on the heels of the Fed pivot. On the 2-year yield, you're looking at yields move up by 5 basis points to 4.44%. They've been all over the place as investors try to digest what happens next and how we should position, how they should position for an eventual rate cut.
Yeah, and a 10-year yield that's at 3.9092 now. I mean, just a phenomenal move from just not even a month ago, basically 6 weeks ago, maybe. Yeah. You know, highs above 520 and so on for the 2-year, and now we're, like you say, Scarlett, right down at 444, an 80 basis point move, and that's just in the last week.
That's just in the last week. So it raises the question how investors are positioned for the new year.
Yeah.
I mean, I know that there is a lot, you mentioned, Tim, that people are taken by surprise, and you're certainly seeing that in the price action right now, but to what extent have they already positioned for 2024? Is that going to take up a lot of next week? And given the thin trading volumes, you might see some exaggerated moves.
One thing that we've been trying to think about is what happens between now and the end of the year, given that we've heard from a lot of Fed officials. We don't hear from the Fed formally between now and the end of January, or now and then the next Fed meeting at the end of January. There are still some companies reporting earnings over the next week, believe it or not. We got FedEx coming next week. We got Nike coming next week. So potentially there could be, you know, some catalyst there. At the same time, I think, you know, people are starting to go on vacation. People are starting to wrap presents and get ready for the end of the year. So I don't see too many catalysts apart from earnings, Jess.
One thing I'm keeping a close eye on, so this is a particular indicator. We've talked a lot about this Santa Claus rally. Actually, this is technically based and defined by the Stock Traders Almanac. It's the last 5 trading days of the year, first 2 of the new year. And Jeff Hirsch over there, the reason he watches that closely to see whether or not stocks end up bucking that trend, but typically over that 7-session span, going back actually to around the 1970s, the S&P 500 gains about 1.3% during that time period. So if the stocks buck that trend, that usually isn't necessarily a good sign, but that's something that some traders keeping their eye on, even though things are a little bit lighter on the calendar next week.
Yeah, I mean, there are still 2 weeks left, though, in the month, right? So perhaps you wouldn't want to be, you know, missing out on some of those basis points that might come or may not come for the rest of the year. But yeah, if you had been in some of the indexes this year, you would have done phenomenally well, right? I mean, the NASDAQ back up more than 50% since the beginning of the year, and the S&P, as we've been saying, close to half that. It's up more than 23% for the year to date.
You just had to have been in the beginning of the year and not touched anything throughout all the trials and tribulations of the year. Forget the regional banking crisis, or
joined like after the October sell-off.
Right? Yeah, that would have worked out nicely.
Almost the same.
Easier said than done, right? Hindsight is 2020, and that's why John Authors each year writes about hindsight capital. It's the hedge fund that is a time machine and can look backwards and make the perfect decision. So I'm looking forward to that.
I'm going all in on hindsight capital.
I think that's a good trade. Hey, you guys have a good weekend. That is going to do it for our Beyond the Bell coverage, our cross-platform coverage of the market here on Bloomberg Television and Radio, Bloomberg Originals, and on YouTube. Catch us on Monday, same time, same place. Have a great weekend, everyone.
Maybe it's a wild world. It's hard to get by just upon a smile.
All right, Tim, so we were just hinting at triple witching, a record-breaking option expiry that took place today.
What?
Yes, triple witching.
Again?
Yes, of course. It is the season, which many had expected this to weigh on the market more than usual following a strong stock market rally, not just since this week, but since the end of October. But volatility, when you look at the VIX, remained pretty tame there, trading around 12, even though options linked to more than 8% of the S&P 500 market cap expired. So that means about, to put it in dollars perspective, $4 trillion of contracts
That's
tied to
it?
stocks. Yeah, is that it?
That's a lot, actually.
Tied to stocks as well as indexes went off the board. So as we were talking about, this is actually the biggest one of the year. Back with us, and who better to walk us through all of this than one of our star reporters on our equities team, Elena Popina, who's joining us here in the Bloomberg Interactive Broker Studio. It's always great having you with us and your expertise. And you were telling me an amazing stat earlier that I had to start off first with. So the call volume here on options trading on U.S. exchanges hit an all-time high. Walk us through why this is significant and what this really means for the stock market moving forward.
This means two developments. Number one is the demand for call options is so high right now, and that's a positive sign potentially for the market, just because options traders make forward-looking bets. You know, they risk a lot of money potentially. The potential loss is much bigger than for equities. So the record call demand doesn't coincide with the record put demand. So that means that call trading is going through the roof. Put trading not as much. That means that there is a demand for the potential upside. We don't know if that's a short-term play or a longer-term play. We do know, however, that traders are going through the roof with the demand for call options being as high as it is right now.
Did we see the volatility today that we often see when we see the expiry?
On the surface, nothing was unusual.
It didn't seem like anything was
Right. Why is the VIX down? Explain to us when we came into the day thinking it was going to be so volatile.
So a lot of the volumes got unwound today with the triple witching. So that's the expiration of single stocks, options, and options on exchange traded products. So that was a 5.3 trillion of volume that was set to expire or roll over. So that's a lot. That put pressure on the VIX index. But what's more important than that, it's that the 8% options worth of 8% of the stock market's capitalization were set to expire. That is an all-time high, according to Rocket Fishman, at SM 500. So that is more interesting. It's a record options expiration. Even that on a notional value, the 5.3 trillion is big, but it's not extraordinary. So that is putting a lot of pressure beneath the belt, makes the whole picture even more interesting.
Did it distort what we saw today at all?
We saw some weird spikes here and there, but on the surface, if you look at the closing prices, nothing extraordinary, nothing of the...
Yeah, just to recap here, we saw the S&P 500 finish pretty much flat. The Dow was up 0.2% if we rounded up. The NASDAQ up a little more than 0.3%.
NASDAQ hit a record, and Elena wrote that story too.
It did, but there wasn't a huge range today.
Right. It wasn't kind of the catapulting sort of either big up move, big down move that
the big
we've
up
been
move
expecting.
wasn't Wednesday for sure, and Thursday was more.
Well, that's what I'm wondering.
Day.
Was some of this stuff kind of front loaded, given that we moved so high in such a short period of time over the last 7 weeks?
Yes, absolutely. I mean, stock markets didn't react to jobs data being hotter than expected. It had no reaction to inflation data being in line with expectations. Markets cheered the Fed decision, so there was a lot of the front running just because you want to be in front of everyone else to buy on the cheap and sell on the high. So that's what's happening. What's going to happen next week is a big question. To Jess's point, there is the Santa Claus rally, there is the historical precedent, but we've rallied so much over the past 7 weeks. It's a 7-week streak of gains in the S&P 500. The last time that happened, 2017. That's been a long time since that was the case. So we could be due for some pullback or some breather after the giant options expiration. We'll see where we land on Monday.
So what does positioning look like heading into year end, just given that backdrop of a rally going on the past 7 weeks?
It's interesting that there is not a lot of hedging demand. Part of the reason is that hedging is expensive. Like, why do we need to pay prices, really high prices, when nothing is going on and the market's in a cheerleading mode? So markets are waiting, options traders rather, are waiting for a shift in the sentiment. We're not seeing this right now, but this can happen with the GDP data due next week, the final read on the GDP number.
Okay, so that's actually where I want to go with you, is other economic data, earnings, potential catalysts. It's something that Jess and I were just talking about with our TV team, Elena. I'm wondering if there is, in your opinion, or are any catalysts that could significantly move the equity market and the bond market between now and the end of the year?
with most of the macro catalysts now out of the way. So inflation is out of the way, the labor market, is the labor data and the Fed are out of the way. It's now earnings growth, and it's exactly a month until JP Morgan kickstarts earnings season. What has been interesting is that analysts have been upgrading their year-end targets for the S&P 500 share prices.
23 or 24?
24.
Okay.
So everyone is now interested in what's happening in 2024. We have seen no upgrades in earnings estimates at the time when we saw gigantic upgrades in share price estimates. So that's a huge disconnect, and that can go on forever. So, it could mean that analysts are waiting for more clarity during earnings season that kickstarts on January 14th, or it could mean that there is something that keeps analysts cautious. What is it? What do they know that we don't know? That's the big question. But, the pace of cuts in interest rates is a big unknown. The state of the economy is a big unknown. What exactly is soft landing? How do you define soft landing? How do you put a price tag on that? Is something that analysts are thinking about right now. So that's something Jess and I are writing about in our Weekender piece. We're focusing on that big disconnect between what's happened in the stock market, the huge leg higher, and exactly no changes in earnings estimates for next year.
And when you look at growth, obviously we had those revisions to third quarter GDP well above 5%. If you look at the Atlanta Fed's GDP Now tracker, growth for the fourth quarter, so the holiday quarter, which is crucial because of consumer spending and the engine of the economy, more than 2/3 of pushing things, it's around 2.6%, but that actually was revised up after some stronger data the past week. It had been a little bit above 1%. So even though that's obviously down a lot from 5%, you kind of square away what needs to be fixed when you're looking at where economic growth is potentially headed versus the earnings estimates, right? Like which one are we underestimating? Are we underestimating how strong the economy is, or do those earnings estimates need to come down? What do your sources tell you?
My sources tell me that a lot depends on what's going to happen in the next couple of weeks with retail sentiment, with consumer sentiment. That is a big part of the economy. Consumer is responsible for a big chunk of economic growth. Retail sales earlier this week increased and were better than expected.
And that's for November, which crosses over the holiday sales.
Right. So if we do see strength in consumer, in the U.S. consumer, that will trickle into earnings strength for some of the key retail guys like Nike, Adidas, Nordstrom. Some of that sector, that sector has been quite wishy-washy in the past couple of months.
Right.
It does need some momentum.
I mean, so far this year, Nike's only up 3.9%, and the company reports earnings next week on December 21st. So it'll be interesting to hear what the company says about the current quarter and the outlook for the quarter starting in January. But again, consumer spending, there have been concerns with these consumer discretionary companies, but I don't see that reflected in the optimism that we're seeing in the equity market right now.
But one note on optimism is, even that we've rallied so much, positioning hasn't been extended. If you look at discretionary position, if you look at systematic traders, they are not at overweight levels right now. There is still some cash on the sidelines. Whether that will continue to be the case.
There's quite a bit of cash on the sidelines.
Quite a bit of cash.
A record amount of money.
in money market funds.
Yeah.
Where do rates have to go on a money market fund in order to get that? In order for investors to say, it's no longer worth it for me to keep this in the money market fund?
Some people say that 3.5% is that threshold. After that it becomes really risky, and what does that decline below 3.5% indicate about the state of the economy? That becomes more all of a sudden a different question.
Right. And then there's some reinvestment risks too with money market funds that have come up in a lot of my sources, that they feel like some of their clients may not be thinking about and what that means for them.
Think of October 27th would have been a good time to take money out of a money market fund and put it in the S&P 500. But as they say, hindsight is 20/20. Hey, Elena, thanks for joining us on this
Thank you,
Friday
guys.
afternoon.
This is the best.
Elena Popina, equities reporter here at Bloomberg News. Don't go anywhere, because we got a couple more hours of great programming here on Bloomberg Business Week. Stick with us. We are Tim Stenovec and Jess Menden in for Carol Master this afternoon, and this is Bloomberg Business Week.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here at Bloomberg. Another day of records for the Dow Jones Industrial Average, 3 in a row. But the NASDAQ 100 index also hit a new record today as big tech stocks rallied after the Fed signaled that its aggressive rate hikes to contain inflation are over and cuts are on the table for 2024. NASDAQ 100 index today up 85 points. That was a gain of 0.5%. NASDAQ Composite Index up 52, higher by 0.4%. In the end, turned out to be a down day. Little change, but a down day nonetheless for the S&P 500 index, falling 0.5 point at the close. So the S&P heads into the weekend at 47.19. Again, the Dow up 56 today. That was an advance of just about 0.1%. 10-year yield 3.91% with a 2-year 4.44%. Spot gold down just about 0.8%. 2019 the ounce. Today we had West Texas Intermediate crude up 0.1%. 71.64 a barrel. Briefly, DocuSign, whose software handles electronic signatures, rallied the most in a year after the Wall Street Journal said the company was considering a sale. Today we had DocuSign up by 12.6%. And Costco Wholesale has announced a special dividend of $15 a share. Costco shares today did advance by 4.5%. Recapping stocks end of the day mix, little changed on the S&P, down 0.5 point. NASDAQ was up 0.4%. The NASDAQ 100 index at a record up by 0.5%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Check out the new Bloomberg Business app featuring Apple CarPlay and the Android Auto. You can listen to Bloomberg Business Week, all our Bloomberg radio programs anytime. Just download the Bloomberg Business app on your smartphone and connect your phone to your car. It's free in the Apple App Store or on Google Play, thanks to our sponsor, Interactive Brokers, Tim.
Well, it's been a wild year for crypto, Jazz. I think it's fair to say that at the end of every single year, but there were some things that made this year unique. There were some arrests, there were multiple bankruptcies, and then, of course, Sam Bankman-Fried is in jail right now after being found guilty of stealing customer funds. He's awaiting sentencing in March. If any year should have upended this sector, this one would have been it, and yet it didn't actually happen because we have this crypto comeback brewing. Bitcoin's value briefly surpassing $44,000 earlier this month. That's its highest point in more than a year, fueled by all this anticipation over a possible SEC approval of a Bitcoin ETF. Joining us now to dig deeper into the future of crypto is Ophelia Snyder, co-founder of 21Co, who joins us on Zoom from New York City. Good to have you with us, Ophelia. How are you?
I'm very well, thank you. Thank you for having me.
So how would you characterize the state of crypto right now? And I don't want to conflate crypto and Bitcoin, which a lot of people certainly do. Bitcoin is a cryptocurrency, but I think a lot of the optimism that we've seen in crypto this year has been the result of optimism over Bitcoin.
So I think optimism is probably a good way of describing the current state of crypto markets. I think we've had a very long and quite transparently, quite brutal winter across the space. I mean, you guys were just talking about some of these things, but it seems like now a lot of that has shaken out. There's a lot less regulatory uncertainty about some of the large players, Coinbase, Binance, some of these large names we're starting to see a lot less uncertainty around. You've seen a lot of the bad actors get shaken out, and we've seen the industry really consolidate and double down. And I think you're seeing now the fruits of basically 18 months of people working on things. I think Bitcoin's certainly leading some of that narrative today between the halving, the ETF, and some of the interesting market dynamics that have happened there. But I think it's broadly true across the industry.
Like you were mentioning, Ophelia, we're waiting on the possibility of the SEC approval of a Bitcoin ETF. How much of that do you think has been priced into some of these crypto coins, including Bitcoin, and how much more and potential further room could there be for an asset class like that?
So I think people have, to some extent, priced in the expectation of an approval, but I think there's a little bit of mispricing there still. The reason being, crypto has never really seen big American style asset management money. It's never been possible really for them to enter the space. There's been a little bit of RIA money. There's been a little bit of sort of other institutional money, but it's tiny compared to, what is a couple of basis points on a multi-trillion-dollar industry. It's very different. And so quantum larger than most market participants in crypto currently have ever seen in terms of what that allocation really looks like once you start to get away from pure play retail or ultra sophisticated institutions. So I think the issue is, to some extent, yes, to some extent, no. I think it's going to take longer to see that money come in than most people are currently expecting, but I think it will be larger than what most people are currently expecting.
What makes you say that, Ophelia? Because I'm wondering that it's not like Bitcoin has been inaccessible to people at this point. I know to traders, they're really looking forward to ETFs just for trading and what they can do with those. But are there really people on the sidelines right now who are interested in getting into crypto who haven't?
So think about it really simply. Most people don't manage their own money, right? Whether that's your 401k or your IRA or, you're working with a financial advisor of some kind or, your local RIA, wherever that it is that you are. None of those structures have ever been able to really access this space. It's really difficult for an advisor to, support a client making that allocation. Historically, that's just been, I'm so sorry, we can't help you, try Coinbase. It's very different when an advisor can actually make a strategic allocation or a client can request a strategic allocation from their advisor. It's a very different structure to that. So it's not people waiting on the sidelines per se. It's just most people's money is tied up in other ways. And, I set up my entire company with the goal of helping my mom get into the space. She started talking to me about this in 2014, saying, there's this really cool thing called Bitcoin. Have you heard of it? I have no idea what you're talking about. But
she's the one who told you about it?
Yeah, that's
pretty amazing. That's not usually. Yeah, tell us a little more about that, because that's not typically something we hear when it comes to crypto.
My mom's brilliant and came to me one day and said, Merck spends too much money on hedging and global monetary policy is too reliant on an assumption of geopolitical stability to work long term. We need an alternative. It's going to help ensure better cross-border trading and be a long-term tool for economic stability and peace. Have you heard of a thing called Bitcoin? I have no idea what you're talking about, but okay. And that's actually how I started looking at crypto. But my mom, interestingly, despite completely getting the point, both on the monetary policy perspective as well as on the Forex side, she never actually made the allocation. The reason she didn't make the allocation is that there was no way within her existing financial infrastructure, the way she does her tax reporting, the way she works with her advisors, that was going to make it possible for her to come into the space. Well, at least not in a way that she felt comfortable with, both from a technology perspective, but also purely from an infrastructure perspective. And that applies to both a lot of individuals, but also applies to things like funds. It's really hard to trade in custody of crypto. From a fiduciary perspective, the level of engagement that you need with your infrastructure. And I know that is a permanently unsexy thing to think about, but tax reporting and custodial and trading infrastructure is a huge part of what these fiduciaries need to provide, and they need to provide it to a certain level. And it's a completely different piece of infrastructure. It's not as simple as, well, you want it, we can sell it to you. There's always been a bunch of gates to this. And we've certainly seen that in Europe, where, we've been operating for the last 5 years and selling, quite frankly, similar products to what's being contemplated in the US. And we see a lot of our clients be people for whom, buying direct physical is just either not what they want to do or not an option.
Well, talk to us about regulation, because that's still pending in Washington, and the risks, because there's still a lot of skepticism when it comes to institutional adoption for crypto.
Yes, there is. And I think that it is changing. When I started talking to large institutions about crypto and blockchain and Bitcoin 5 years ago, everyone looked at me like I was completely out of my mind and that this was just not something, didn't make any sense. Are you 100% sure that, this exists? How can you even have a digital asset? What does that mean? There were a lot more questions on basic viability and whether or not we were just nuts. I think that is no longer the case. I don't think really the doubts around, whether or not this asset's going to exist, going to continue to be built out. The value of blockchain to institutions, the value of smart contracts to institutions. And I think that's especially true in terms of Ethereum. And you're starting to see, large asset managers bring tokenization projects forward. You're starting to see more utility in cross-border payments. You're starting to see real use cases in everything from financial services to video games. And I think that's really exciting. And it's changed the dialogue because now there's a real thematic here and there's a real proven use case that's not solely contained to the crypto world.
We really appreciate you joining us this afternoon. That's Ophelia Snyder, co-founder of 21 Co, joining us on Zoom from New York City. Again, to get crypto on the Bloomberg terminal prices, just get up the dashboard. CRYP Go on the Bloomberg terminal. Bitcoin now at about $42,244. Hey, let's get on over to the latest world and national news. We've got Dan Schwartzman in the Bloomberg 1130 newsroom in New York. Hey, Dan.
Hey, Tim and Jess. Rudy Giuliani has been ordered by a federal jury in Washington to pay $148 million to two 2020 Georgia election workers after the former New York City mayor promoted conspiracy theories about the two. Both Ruby Freeman and her daughter, Andrea Moss, had asked for $48 million in damages after Giuliani accused them of tampering with ballot counting. The Israeli military says that it mistakenly killed 3 hostages while conducting operations in the Gaza Strip. The Army's chief spokesman, Rear Admiral Daniel Hagari, says troops had mistakenly identified the 3 as a threat. It's not yet clear if the hostages had escaped their captors or were abandoned. The Army has expressed, quote, deep sorrow for the mistake and are conducting an investigation. One day after Nassau County and Queens Republicans selected Long Island County lawmaker Mazi Melissa Philip as their candidate to replace expelled Congressman George Santos, the Ethiopian-born former Israel Defense Forces paratrooper held her first press conference. Philip tells us where she stands on taxes.
As a county legislator, I supported 2 tax-free budgets with our county executive and my colleagues in the legislature. I am the only candidate in this race who can say that I have not supported tax hikes.
That's Republican candidate for Congress from Long Island, Mazi Melissa Philip. Reports say a multi-billion-dollar deal is imminent between Strategic Sports Group and the PGA Tour to form a for-profit entity, PGA Tour Enterprises. Strategic Sports Group is a consortium of billionaire American sports team owners, including Boston Red Sox boss John Henry, Atlanta Falcons owner Arthur Blank, and Wick Grossberg from the Boston Celtics. The group is expected to infuse over $3 billion into the new entity. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:40 on Wall Street. We do check markets all day long at Bloomberg. The Dow, the S&P, NASDAQ ended the day mixed. It was another winning week for the U.S. stock market. 7 weeks of gains for the S&P today, however, ended the session down by half a point, 47.19. The Dow at a record 3 in a row, up 56. The Dow heads into the weekend at 37,305, up by about 0.1%. NASDAQ, the composite index, up 52 at 40,813, up today by 0.4%. NASDAQ 100 index also closing at a record. Today we had the NASDAQ 100 index up by just about 0.5%. So Wall Street going all in on stocks and bonds this week after Fed Chair Jay Powell said, and the Fed reaffirmed that they are ready for rate cuts. S&P today, as I mentioned, down half a point, little change there. 10-year yield 3.91% with a 2-year 4.44%. Well, as for the S&P outlook, Brooke May is managing partner at Evans May Wealth, and she was a guest right here on Bloomberg Business Week.
When we look out to the end of 2024, our price target is 5,200 to 5,400 on the S&P, which a few weeks ago seemed like a stretch, but with the rally we've had, that's really only 10 to 14% upside from here. So if we see the earnings growth that we're expecting, we think that we'll see earnings up 11% from this year to next year. At 19 times forward earnings, it's reasonable that we could get there.
And to put that call in context, again, the S&P now at 47.19. It did fall today by just about half a point. Streaming platform Roku shares moved lower today by 6.8% after MoffettNathanson cut its recommendation on the stock to sell from neutral. Spot gold, little change, 2019 the ounce. West Texas Intermediate crude ends the week 71.68 a barrel, up today by 0.1%. Again, recapping, stocks ended the day mixed. S&P fell by half a point. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Thank you so much for that update, Charlie Pellet. Really do appreciate it. Well, the MSCI Asia Pacific Index rallied nearly 3% this week. It was led higher by Australian, Korean, and Chinese shares as tech stocks climbed. Bonds rallied through the region, including in Japan and Indonesia. That's a sign that global investors are becoming comfortable with riskier assets. This after being cautious on investing in Asia over the past decade, as the investors dealt with deglobalization and slower economic growth in the region. Joining us now in the Bloomberg Interactive Broker Studio is somebody we check in with every few months. John Whithar is head of Asia Special Situations for Pictet Asset Management, usually based in Singapore, but when he comes to the U.S., we like to get him in the Bloomberg Interactive Brokers Studio. It's good to see you. How are you?
Great, thank you. How are you?
Doing well, thanks. What brings you to New York every few months?
A couple of things: meeting investors, talking to investors, research, touching base with brokers, analysts, those kinds of things. So, yeah, always a good trip. And I lived here for a while, so a bit of social.
How has the tone or the reception been this trip versus last time you were here a few months ago? Because a lot has changed since then.
You know, a lot's changed, but one thing that hasn't changed is the sentiment around China. Yeah. So, sentiment around China is pretty bad. It's pretty low. And we certainly haven't seen a tick up there yet. I think there's quite a lot of apathy. Positioning is about as bad as I've ever seen it. And so, you know, I think we're sort of waiting for that to rectify itself.
Is it uninvestable, China?
I don't think it's uninvestable. I don't think that at all. I mean, hey, it's still the world's second largest economy, second largest stock market. So I don't think uninvestable is the right way, but there are risks. And certainly if you look at macroeconomically what's happening there are challenges that are giving pause for thought for investors.
So recently, though, what's sort of driving things when you have a backdrop of the past decade that has been so tough for equities in Asia?
Look, I think the main thing that investors really want to understand is the geopolitical. And that's obviously also the hardest as well. It's very unpredictable. And so, when investors are trying to frame their investment views around Asia, obviously you start with China and you try to understand what the risks are from the geopolitical perspective. And I think that's still something that people don't understand. It's hard to unpack. It's changing very quickly. And as a result, with the macro backdrop also being challenged, people are saying, look, we're sort of happy to sit on the sidelines at the moment.
What does 2024 look like? I mean, what are the opportunities that you're presenting right now to clients? Where do you see room to run?
Look, I think the first thing to say is that China's not dead by any means. There are opportunities in China. And as I said, we are talking about a very large economy, and we are talking about a lot of consumers there. So there are opportunities, and certainly we agree that you probably need a little bit more nuance in the way that you do invest in China rather than perhaps just directionally. But the story of 2024 will most likely be Japan, simple as that. Japan, we're seeing a lot of regulatory reform happening in Japan right now, listing rules around the TSC, focused on price to book improvement, ROE, these kinds of things. And so there's a lot happening in Japan that's happening from the ground up level, from the corporate level, that is really exciting people, because we're starting to see a cheap market, a market that's historically cheap, finally unlocking value at the corporate level.
Is it hard to convince investors to allocate enough to Asia, given that there has been, in recent years, such a history of outperformance when it comes to U.S. equities?
Exactly right. I mean, that's the bugbear. Right?
I mean, that's got to be one of your biggest challenges.
100%. Look, at the end of the day, why? If it ain't broke, why don't fix it?
Yeah.
I mean, if you look at what's happening right now in the U.S. markets, I mean, why would you take money out of the U.S. markets?
Doesn't make your job any easier.
Doesn't make my job any easier, but also it creates opportunities as well. So there's still value opportunities out there. There's still a lot of event-driven situations that are interesting to us. You get stocks that do large buybacks or takeovers, MBOs, these kinds of things. There are opportunities there, regardless of who's involved. So that's interesting to us, and that's why you are seeing these high levels of transactions, because of that apathy to the market.
What are some of the top questions and concerns that you hear from your clients?
I think in regards to Japan, the question that you always get is, why is it different this time?
Right.
We've seen these instances before, as we know, around Abenomics 2014. We saw the market move up very, very sharply, and not just to give a pullback a few months afterwards. So there is that level of skepticism, but ironically, that skepticism exists both from international investors and the local investors themselves. But it's worth noting that the regulators, the Tokyo Stock Exchange, METI, and even Kishida-san himself, the PM, they're very focused on making it different this time. And so they're approaching it from an angle of corporate reform, creating companies that are more robust, balance sheets that are more streamlined, and ultimately focusing on shareholder engagement, shareholder returns, and ultimately efficient markets.
John, when do you think you'll come back here and sit down with us and say the last year in China was a very good year?
I mean, I hope it's next year. But ultimately, it's really difficult to tell. I think,
is the government setting it up for 2024 to be that? Are they doing the right kind of reforms? Are they doing the right kind of stimulus?
Great question. I don't think we're seeing that yet. I don't think that's clear. I think
it seems pretty targeted.
It has been very targeted. There has been loosening, but ultimately we have not seen this, quotation fingers, bazooka stimulus that people have been waiting for, and that may be a red herring itself. So we're all waiting. I think ultimately what we'd really love to see is a thawing of geopolitical relations, a thawing of the standoff that we've seen, but it's just difficult to see with 11 months out from an election. This is an election talking point. Mm-hmm. So I mean, we're ever hopeful, ever green, but I don't think there's anything immediate that gives us anything that to be spectacularly bullish about, at least directionally. Mm-hmm. Other than positioning, I should say.
Right, and especially when you're talking about sort of different conflicts, whether you're thinking about when it comes to the U.S. versus what's going on with Beijing. What about when it comes to those repercussions, particularly with industries like chip makers, technology stocks, which really took off this year after getting so hit hard last year? How do you view that, particularly when it comes to Asia equities?
Yeah, so I mean, look, we really are seeing a bipolarization of the world and technology along with that. So it's very, very clear the big beneficiaries of this whole sort of decoupling have been the US chip companies, Taiwanese companies as well, obviously TSMC, and then as a derivative to that, the Japanese technology guys as well. So we are seeing winners and we are seeing losers from that. But it's not just the American chip guys that are winning here. It is the others as well. It's the Taiwanese, the Japanese as well, and not to mention we've got a lot of investment in semiconductors and technology into Southeast Asia as well. So you look at places like Malaysia, that's becoming a kind of a semi-hub as well. So there's a lot of investment going south, and then obviously the big gorilla in the room is India. A lot of growth happening in India, not necessarily in the semiconductor space, but a lot of growth happening in India.
Yeah, a lot of investors hoping it's the next China.
Well, I mean, the GDP print was brilliant.
Right.
I saw the GDP print the other day, but
And John, we love it when you join us. We got to run. John Whithar is head of Asian Special Situations for Pictet Asset Management, joining us here in the Bloomberg Interactive Brokers Studio.
your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. DocuSign, whose software handles electronic signatures, rallied 12.5% today after the Wall Street Journal reported that DocuSign was considering a sale. Citigroup is once again allowing most of its employees to work from anywhere for the final 2 weeks of the year. Citigroup shares today fell 0.8%. Alphabet's Google is changing its Maps tool so the company no longer has access to users' individual location histories, cutting off its ability to respond to law enforcement warrants that ask for data on anyone who was in the vicinity of a crime. GM cutting more than 1,300 hourly jobs at a pair of plants in Michigan. And with more, here's Bloomberg's Steve Rappaport.
Charlie, word comes less than a month after a new labor contract was ratified by its unionized workforce. The automaker said in filings with state regulators that a plant in Lake Orion, Michigan, outside Detroit, will lay off 945 employees, and a factory in Lansing, Michigan, will lose 369 workers. The staff reductions at both factories are effective as of January 1st. The job cuts come after the automaker committed to wage hikes that were approved last month by United Auto Workers members. The Lake Orion plant manufactures the Chevy Bolt electric car, which the company will cease production of at the end of the year. The Lansing factory produces the Cadillac CT4 and CT5 models, as well as the Chevrolet Camaro sports sedan, which GM has said it will stop making next month. Charlie?
And that's Steve Rappaport reporting. Shares of General Motors declined today. GM was down 1.4%. And those are our top company stories at this hour. This is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenevec on Bloomberg Radio.
It is Bloomberg Business Week on this Friday afternoon. Just a few minutes from 5 o'clock. It's Jess Menton and Tim Stenevec. Jess in for Carol Messer this afternoon. Let's get a check down the latest world and national news. We got Dan Schwartzman in the Bloomberg 1130 newsroom in New York. Hey, Dan.
Hey, Tim and Jess. A jury ordering Rudy Giuliani to pay a steep price for defaming 2 Georgia election workers in the 2020 presidential race. Bloomberg's Steve Rappaport has the story.
Mayor owes Wandrea Shea Moss and her mother Ruby Freeman $148 million for spreading false claims that they tampered with ballot counting. Moss and Freeman argued Giuliani's conspiracy theories led to a barrage of racist threats that upended their lives. Giuliani's attorney Joseph Silby told the jury that damages would amount to the civil equivalent of the death penalty for his cash-strapped client. Silby conceded there was significant evidence of the harm the plaintiffs suffered, but argued many other people besides Giuliani were responsible. Steve Rappaport, Bloomberg Radio.
Thanks, Steve. Just a day after Nassau County and Queens Republicans selected Long Island County lawmaker Mazi Melissa Phillip as their candidate to replace the disgraced expelled Congressman George Santos, the Ethiopian-born former Israel Defense Forces paratrooper held her first press conference. Phillip says she stands against terrorism.
I stand strong with our communities in support of Israel, Ukraine, and all nations that are subject of terrorism.
That's Republican candidate for Congress, Mazi Melissa Phillip. Former White House Chief of Staff Mark Meadows has asked an appeals court in Atlanta to transfer state criminal charges against him to federal court. Meadows has been charged with election interference. Now, a move to federal court would allow Meadows to argue he is immune from state prosecution because his actions were related to his job. A win for Meadows could prompt other defendants to ask to move to federal court as well, which would strike a blow to prosecutors. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Dan Schwartzman, and this is Bloomberg. Back to both you, Tim and Jess.
Thanks, Dan. Really appreciate that update. Hey, Jess, we love talking about anything that happens with logistics and shipping here, whether or not that's backups at the Panama Canal due to low water.
That's right.
Or geopolitical conflict that would lead ships to take a different route when they go in certain parts of the world. And that's exactly what's happening right now. We got spiraling attacks on merchant ships by Houthi militants off the coast of Yemen have actually prompted widespread trade disruption with some of the world's biggest vessel owners who've been evaluating whether it's actually safe to send crews through the Red Sea.
And also looking at this, the delays could bring further disruption to global supply chains. And Tim, you know how much we kept talking about supply chains being the key word when you think of the height and the peak of COVID. We've gotten obviously well past that, but now this is a different issue when you are talking about those supply chains and what this could potentially mean when you're thinking from what you were talking about, geopolitical issues, but also global economy, because that is such a key part of this.
The reason we're talking about this is because 2 of the world's largest container shipping lines said today that they were pausing transits through the Red Sea after their vessels were attacked 2 oil tanker companies have now said they are insisting on a clause in charters that will allow them to send their ships around Africa if they deem the waters off of Yemen unsafe. The move will increase pressure on the U.S. and its allies to improve security along one of the world's most important trade corridors to avoid undermining the global economic recovery. An international trade group called for more military support to end the attack. These companies that we're talking about, Jess, include Maersk. It's the world's second largest owner of container ships. They said in a statement Friday that they've instructed its vessels heading for the southern entrance of the Red Sea to pause their voyages. Its vessel, Maersk Gibraltar, was attacked. Shortly after Maersk's announcements, Germany's